All right, guys. Okay. All right, again, welcome to the call. Of course, the title of this is Team Wealth Builders, Naked Trading, introduced by Adaeze Duncan, who is our IML educator on IML TV, creating the simple trading system, okay? So, guys, I fully want to give full credit to Adaeze Duncan. I thank her, because, guys, it was because of her reading a book called Naked Trading that she went ahead and stumbled across this strategy, which has definitely changed her winning game as far as trading is concerned. So I definitely wanted to make sure I give credit to her. After this class, after you get the foundation, I definitely want you to make sure you get on your IML TV and follow Adaeze Duncan, which she is in the Forex 101 trading class. You definitely don't want to miss those nuggets, guys, as she continues to perfect this whole strategy right here, okay? So again, I thank her so much. She was kind enough to last night get on a conference call with me personally and really kind of go over the basics of this Forex trading strategy here to make sure I got everything correct. And so I truly appreciate her for that. So let's go ahead and get started, guys. So the goals of tonight trading and why this is so important is, number one, so that you can develop a solid trading strategy and plan, okay? A solid trading strategy and a plan. Because what we find out is that we hear all these different strategies out here and, you know, we try in this one. Well, the harmonic scanner, let's jump in after the D and jump in and out. Let's do this. Let's go ahead and, you know, we catch the trend line going this way, support and resistance, then we jump in here, jump out of there. And what happens, guys, is we try these strategies, we get a few wins, and then we turn around and we get a few losses, we lose again, and then say, you know what, the strategy just doesn't work. And so with this right here, it's something you definitely got to try and build confidence, because that's exactly what we need to do, is build some sort of confidence in the trading strategy that we have. And I believe with this right here, as you see it, and as you see how simple it is going to be, that you will build significant confidence in the plan and trust in the plan so that you can stick with this, okay? Number two, you're going to learn how to identify resistance zones, okay? Support and resistance zones. So if you haven't really looked at your charts, I'm going to really make it simple for you on how to identify those areas, because at this point, guys, if you've been in longer than a couple weeks, maybe a month or so, at this point, even using the tools that we have, you should start looking at your trading view, which you find those charts to sign up on tradingview.com. You should be able to now start taking what you've learned from IML TV and IML Academy and be able to look at a chart for yourself and now start identifying the support and resistance zones, okay? And I'll talk about that. We're also going to talk about how to identify optimal entry and exit points in a trade, because this is so important right here, because the question that we all have is, okay, when do we get in? All right. And then when we get in, when do we get out of the trade? And then what happens is we get in a trade, and then of course we've been negative, then finally we go positive, and then we're so happy that it's positive and we close the trade out. And then you find out when you close the trade out that the trade goes up from $2 up to $20, and you kick yourself in the behind because you wonder, man, I could have stayed in that trade. So we want to go ahead and eliminate that whole thing altogether, guys, okay? And of course, number four, to minimize stress and eliminate apprehension while in a trade. Just what I talked about, guys. We're going to bring that stress level down so that you're not agonizing over, should I be in this trade? Should I not be in this trade? How am I going to do this? What's going to happen? You know, so that's very important that we're going to cover that. And then last, to understand and evaluate your risk to reward. Okay, for those of you who are new as far as the trading, there's a percentage, a ratio that you'll get to calculate. So that means, let's say you put $10 at risk and you're going to gain $10 or 10 pips. Pips are going to be the certain points or so that we get in the trade. Let's say we risk 10 pips to get 10 pips. Well, that's a 1-to-1 ratio. Okay, we're going to show you how you can get a consistent ratio of wins so that each trade can make up for the losses. okay, so that each trade can make up for the losses that you make, okay? So let me put this disclaimer out, guys, okay? Of course, past performance does not dictate or guarantee future performance or gains, but what I will say is that the key here, guys, is that we want to build consistency in our trading. No, you're not going to win every trade, but here's the thing: if we could get to a better than 55 or 60 percentile or 70 percentile win rate, okay, then you're doing really well. And at the end of the month, we want to make sure that we've made pips. Okay, that's really the key here, guys, is how many pips do you gain, and making sure that we gain more pips than we lose. Okay, gain more pips than we lose. So before I get started, guys, I want to kind of get your mind right so we can understand why it's so important to have a simple strategy plan. So I'm going to let you guys see this short little video. And guys, I followed the same video that Adaeze Duncan had in her training. And so I think you guys will like it. It is, you're going to be wondering, why are we watching this, Shawn? It is about the Venus Flytrap. So I'm going to make sure you guys can hear that. So please pay attention closely.
The Venus Flytrap. Like the sundew, it makes itself very attractive, oozing nectar across the brim of each leaf. But any visiting insect had better watch out for these 6 tiny hairs. This fly has to tread carefully. If it strikes one hair, it can carry on feeding, but a timer has been set. A second strike in less than 20 seconds, and the fly is doomed. An electrical impulse is triggered, and the leaf snaps shut in just a fraction of a second. The tips lock together like prison bars. If the fly is very big or very small, it may just manage to escape. But most are trapped and die. Days later, the trap reopens. All that remains is a husk. The plant has finished its meal and resets itself for its next victim.
All right, guys. I hope I didn't gross you out too much watching that. But guys, the reason that I did that is because it's going to kind of segue into our next part. So are we the trap or the fly? Neither one, neither one. Guys, the whole reason I showed that to you is basically for this reason, that we look at our trading plan as a Venus flytrap. And the Venus flytrap has a very, very simple purpose, okay? You see, its plan is very simple. All it does is it opens up, it has the barb, when it hits the barb, a timer sets off. If it hits the barb the second time, then within that 20 seconds, then guess what? It's going to close up. Now, the whole thing here is, does it get every single fly? No, it doesn't, because if it's too small, guess what? It can go through the little hooks and leave out. If they're big, then guess what? Then they're going to squeeze their way through and they can make their way out. So the whole thing here, guys, is it doesn't have 100% trap rate, okay? And, you know, we look at strategies of trading and we expect that this needs to work 100% of the time. Well, no, just like the Venus Flytrap, guys, the plan, or the Venus Flytrap, you know, it has a simple purpose of just capturing it, closing it, and doing what it does. It stays efficient that way by letting the small ones and the big ones go, because now it doesn't have to conserve, I mean, it gets to conserve most of its energy to just have most of the wins of having just the right size, of letting that format, that plan execute itself, and then, you know, then we have success. And this is how we need to look at trading, okay? We need to have a simple plan, all right? We need to follow that plan. And then we know exactly when, you know, we're going to let something go, or whether we have that particular loss. But in between, we want an average win rate that's higher than normal, okay? And so that's basically what we're talking about today. So I just kind of want to share that with you. Let's go on. So what do you need for your trading plan, okay? We talked about that before, but what is the trading plan? It needs to be simple and consistent. Okay, so just like the Venus Flytrap, it's simple. Okay, nothing high tech about the way that the Venus Flytrap captures its thing. Just a barb, it hits the barb, and then it executes. Okay, simple and consistent. Number two, for your trading plan, you need to have a tentative, and I put in parentheses here, provisional, not fixed, which means that you can tweak it, you can adjust it, but you need to have a framework of rules that you follow. So when you look at, you know, when you get in a trade, why do you get into that trade? Okay, why particularly is it, this is the reason I'm getting in this particular trade, and why am I getting out of the trade? Okay, do you have a set of rules to follow? Well, guys, we're going to talk about that, okay? You need to have a way to measure its effectiveness to make the adjustments. If you don't have a plan, or if you don't have a foundational part to look at, well, how are you going to make adjustments? How are you totally know that it's not going to work instead of scrapping the whole thing? Maybe a couple little tweaks could have got it right on point to where you can start improving its win rate, okay? And then last, you need to be able to back test it and then practice it for success. So that's what we're going to talk about. How do you back test? We need to be able to look back and see, does our strategy actually work? And do we have a consistency there to track its performance to say, hey, this does work, or no, this plan doesn't work, we need to trash it. So we're going to get into all of that. All right, so get your pen and paper out. This is what I want you to start writing down. I'm going to give you the format of the naked trading strategy, and then I'm going to go ahead and show you how we execute that and what makes it so simple, okay? Guys, as it says here on the top, you can use time frames to match your style, but warning, it does not work on time frames lower than the 1 hour. Okay, so it's not for scalping. So it's not optimal to use this on the 30-minute or 45-minute or 10-minute or 15-minute or 5 or 1. Okay, this is really for an hour, 4 hour, the day chart, the month chart. Okay, but you can use any of those if that's your style. Okay, so what I'm saying is this is actually for swing trading, day trading and swing trading, okay? So the first step in what we do in the naked trading strategy is, number one, we're going to mark up our support and resistance lines on the 4 hour chart. I have 4 hour chart, but you can also mark it up on the day chart. So the day or the 4 hour chart, okay? And the reason why we do that is because the higher the time frame, the more dependable and solid that our support and resistance lines are going to be. The higher the time frame, the more solid our support and resistance lines are going to be, because we have a bigger time space of more information that we're basing that on. When you have the smaller time frames under an hour, you have a lot of miss patterns, or you have different signals that are false signals. I should say that, false signals, and you don't want that to be part of your support and resistance. Okay, you only mark up the major and obvious turning points. I'm going to show you about that. Okay, I'm going to show you how that's done. Okay, number two, when you mark up your chart, you mark it up on the 4-hour chart, and then you enter on the time frame underneath that. So for instance, if we're gonna mark up today on the 4-hour chart, but we enter into the trade on our 1 hour. Okay. Now, if we were marking on the day chart, then you mark it up on the day and then you enter into the 4-hour chart. But now remember, of course, each candle, when you see it on the chart, will go for a 4-hour length of time, which means you could be in a trade for a day, 2 days, a week, maybe in a couple weeks. Okay, so just keep that in mind there. Okay, here's where you'll make your zone boxes, and I'll show you about how we make a zone, because when we write our support and resistance lines, guys, it's really just a marker in our mind, okay, of where we believe that the market is turning, and we make a box, okay, because it's really a zone. It's not going to be perfectly touching the line. It's going to be somewhere in that area, so we want to highlight that. Okay, so here's the rest of the plan. How are we going to enter into these trades? What makes the naked trading strategy so good? Okay, well, first of all, here's what we're basing it on. We are only looking for engulfing candlesticks. Okay, and we are looking for these on the 1-hour time frame. This is the time frame that we'll enter. We'll mark it up on the 4-hour and we'll enter it onto the hour. We'll mark it up on the 4-hour chart, and then we'll enter into the 1-hour time frame chart. Okay, and we're looking for engulfing candlesticks. All right, all right. So as I go through, I'm just going to go over these, but then I'll show it all in action so you guys know. Okay, our entry plan is, once we identify the engulfing candlesticks, guys, we're going to use buy and sell stops. We're going to use pending orders. Okay, if you're not familiar with pending orders, make sure you go back into your IML Academy, into your basics, and look at pending orders to set up the trade. Okay, and then we set up our stop loss 3 pips above or below the higher low of the engulfing candle. So I'll show you that. Okay, and when to enter. Okay, I put it in blue for buy and red for sell, so you guys kind of know. So that's why I color coded there. Only take buys in a buy zone, and I'll show you that. We're only going to execute these when we get into a certain zone. So now we have the idea of when we're supposed to enter and when we're supposed to exit. And we'll only take sells in the sell zone. Okay, and I'll show you that. Here I have an entry clause. Okay, while you're in the zone, you need to see the engulfing candle going in the direction that I want to trade. Okay, and then if the price breaks that level, then we're going to do an A or a B, A or B. Okay, so I know I'm kind of handing this to you guys, but now we're going to go ahead and show you this in action so you kind of know what I'm talking about. Okay, all right, guys, so here is our trading view. Okay, again, if you haven't signed up for it, it's a free account. It's at tradingview.com. And again, this is just a great platform in order for you to manipulate and draw up your charts and everything, so that you can kind of back test the different strategies that you use, okay, and get a closer look. When I do trades like swipe trades, or I do something off the harmonic scanner, or I use a web analyzer or something like that, I'll jump on here and I'll look at it from a bigger picture so I can kind of understand. All right, so first, let me kind of give some brief definition, because I know some people are a little new, but I want to make sure you're caught up. I'm going to blow this up just a little bit. All right, guys, so what is an engulfing candle? Okay, let's see. Oop, didn't mean to do that. Let's see. Do, 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 do. All right, so this, ladies and gentlemen, is an engulfing candle. And boop, 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 boop. This is an engulfing candle. Do, 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 do. All righty. And let's see if I can do it one more again. Getting better at this candle stuff. There we go. No, I don't need that one. I'm trying to get this all pretty. Do, 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 do. All right, guys. So basically, if you don't know what engulfing candle is basically it is a long body, just like this, and it's bigger than the previous one. Okay, it engulfs the size of the previous candle here. Okay, and so we use these to kind of help us determine the direction that it's going to go. We look at these candles. So as you see, the market's kind of turning. It comes down. We can kind of consider this one an engulfing candle also because it's bigger than this last one here, bigger than these last 2 or 3. So this is kind of an indicator. But if you want a better confirmation, then hey, you look for a bigger candle like this one. Big, fat, juicy candle just like this, guys, is what you're looking for, okay? Just like this over here and just like this over here. A nice, juicy, thick candle right here is what you're looking for, okay? So when you see these, this is how we know, hey, this might be an indicator that we're going in a certain direction. If it's going to be green, okay, this lets us know it's going up for a buy, okay? If it's red, it lets us know it's coming down for a sell. So as I said with the entry clauses is we want to determine the direction that we want to go by the engulfing candle, and we're looking for the candle that goes in the direction that we wish to go. So if I'm looking, let's say this is a support down here and I'm looking for it to go up, I'm looking for a green engulfing candle so that I can go up. And if I have a resistance up here, okay, where my mark is, I'm looking for a red candle to go down in the opposite direction. So, all right, so that's just the real basics there, okay? Again, if you need to know about engulfing candles, please get into your IML Academy so it can get into details. So, 2 features on TradingView I really want you to, this is incredible, I love it, and Adaeze talks about it, and I love how she explains it and talks about it. It really has helped. I don't know if this option was here before, but they've had it. So on the bottom here, if you can see, it says go to, all right? This is what we're doing, guys. We're gonna go to the past. So you hit go to, it's on the bottom, and here it has the date. It's showing the current date. We're right over here, this current date. What I want to do on the free version, I think I can only go back about maybe 3 years. So I'm going to go to 2015, same day, and I hit this and work now. We're just testing this. And it should go back in time. Go back in time, people. We're going backwards. All right, hey, let's refresh in this. All right, go to. Oh, doesn't want to work. Oh, it's hiding, that's why. Okay. All right, guys. So let's see, where is my length of time? So what did you do to go on TradingView? Did you say the path? TradingView is tradingview.com. That's something that you have to sign up for on your own. All right, so here's what I'm doing. I'm looking for the date. Excuse me, guys, because sometimes TradingView gets just a little funky. Let me refresh one more time. And actually, let me go on the 4-hour chart, because that's where I'm going to be marking up on the 4-hour in this particular version. And oh, where'd you go back in time? Okay, so all right, so what I did was I go down here on the bottom. There's a go to button down here. I go to go to. So first I select the 4-hour chart. I go to go to. Right here's the date. I go ahead and change that last number to 2015, and I hit the arrow and it goes back in time. All righty, so there we go, So, all right, so our point was right in here. I was doing it right. It was just disappearing on me. Let me stretch it out a little bit. Okay. All right, so we first go back in time, excuse the little pop-ups, and what we're doing is we're going to mark up our chart from here. Okay, so I'm coming up here. This is our support box. Now, if you're kind of new to TradingView, you'll come over here onto the side where this little line is. You'll hit it, and what I can do is I can select trend line, horizontal, all that. When I star it, it comes up here like a little favorite, so I could always refer to it. So that's how I set up my TradingView. Okay, now what I want to do is I want to hit my horizontal line. Mine's going to be green, a bright green. And what I do is I'm going to kind of hit these points, all right, that show obvious turning points, all right, obvious turning points. So let me see. All right, now I may not get every single point, but I kind of want to get the major ones, the more obvious ones. So I may just go, let's see, let's maybe put one maybe right around here. Okay. Not bad, not bad, not bad. Okay. So you say, well, Shawn, what's the purpose of this? Let me show you why. And I'm going to kind of highlight. Oops. There we go. Okay, I'm going to kind of highlight. I guess while I'm on Zoom, it doesn't want to cooperate. Okay, there we go. Let's kind of do that. It's going to do a section. Bear with me, guys. Y'all get a drink of water or something while I'm making this look all pretty. Work with me. Okay, let's try this. Didn't want to do that. I want to put that back and let's highlight this, redo this box. Okay. There we go. A little bit prettier, a little bit prettier. So I'm going to highlight that. All right, then I'm going to highlight. Beautiful artwork, beautiful artwork. If y'all didn't know, purple is my color. Come on, boxes. I think because Raymond Zachary's on the phone, he's making it difficult for me today.
You are too funny, brother.
That's it.
You're doing a good job. You're doing a good job.
Oh, yeah. It's this. You know what? You know, my perfectionist side, I got to get it. I got to get it. I got to get it. All right. There we go. There we go. Let's get that. Okay. And let me see. I have another zone area. One last one, guys, and then we'll be ready. So. All righty. I know you say, well, what in the world is all these boxes for? All right. So let me kind of explain this a little bit, okay? When trading, guys, we have the support and resistance, okay? So resistance is going to be kind of the top. It's the ceiling. What happens is when you're trading, it goes up, it goes up, it goes up. And for some reason, price fights this area and then it turns around. And so it does that, in a number of areas. And so we kind of make a imaginary line here that we can see. So it gives us an idea of where the market turns. Down here, we do a support. It supports like the floor. So when it comes down, boom, we want it to come, turn around and says, wow, price kind of fought that area, turned back around. And so we want to kind of mark those. But guys, when it comes to trading, this isn't a real line. It's not like, boom, it just hits this line and this is a real line. It's actually a zone. It's just an area, okay? It's really just an area that we're paying attention to, that we know that price kind of fiddle-faddles in this area, and we want to kind of make a mental note of it, all right? So now let's see, how do we back test? What's this whole naked trading? The first thing is this is all you need. You just need support and resistance. You don't need trend lines. You don't need Fibonacci. You don't need Elliott and all these magical other things to go ahead and do it. All you need, guys, is support and resistance, okay? Now, here's another great feature, all right? We use the go-to go back in the past. We are now in the past. We're back in 2015 now, okay? And I'm on the 4-hour chart. And the reason we're doing this support and resistance, it goes all the way to our current time because we're going to trade off of these zones. But now we want to back test it. We want to find out, does this really work? So up here, we probably never noticed before. I don't know if this is a new feature Adaeze was talking about. This is called the replay. And so here's what the replay does. I hit it, all right, makes this little window over here. And then I have a little red line here. See this red line? Guess what happens when I hit this red line? I go over here and I hit it and poof, all of that disappears from behind. We erased future history. Okay, we erased future history. Okay, we did that because now we're going to find out how the naked trading actually really works. All right, so zones are still there, but we hid the candles. Okay, I hit the replay. It made a red line. Wherever I put the red line, it erases everything from here to the future, okay? Over here, okay, first of all, you want to see jump to. You want to make sure these little candles are here. And then I have a play and then a forward. Here's what happened when I press it, and then I can adjust the speed too, okay? We're going to find out, are these zones working? So I hit play, and here's what happens. Watch this, guys. Candles are going. Okay, look, hit this zone and came back. Let me stop right there. All right. So we're looking at it. We started, it came up, shot up, but where did price turn around? At our zone area. Okay. Of course, you don't know what could have happened in the future, but hey, look, this is a clue right here. And what I'm waiting for, okay, is to see, is price going to break this zone or is it going to turn? All right, well, it turned. Let's see what else it does. Push play. Price comes back up again. Up, it fights that zone area. Nope, comes back up. Huh. Comes through, but look at it. Coming back down. Still hanging in the zone area. What I'm looking for, guys, is it respecting these areas? Look at it. Bounced off of this zone area. All right, so let me stop it there. So I just kind of wanted to show you how we back test. All right, so now let me go ahead and, oops, let's go back, let's go back, let's go back. Where you at, zones? Where you at? I was doing just great. Righty, righty, righty. Let's go back to the future. Actually, guys, bring us back to the future. Are you hiding? That's where it is. It's hiding from me. Oh, wow. Look at these zones. They're way down here. That's where we are. All right. So we're in relation to the zones. I'm searching. Ah, so it looks like we went really high. All right, guys, because I really want you guys to get this whole part. Let's go back again. Actually, I'm going to use GBP USD. All right, all right, all right, all right. All right, 4-hour chart. Let's do it again. I go to go to. I'm going to go back to 2015. Let's make sure I do it right. Going back in time. Oh, it did it. And we're right here. Okay. Now, I'm going to mark up right where I'm at. Going to do some more obvious turning points where I see the market turn. I didn't mean to go there. Let's go down here. See where else. I'll do something up here. Okay. Is there anything down here? Okay. Looks like I got it pretty covered, Let's go back. Let's go back right here. All right, so what I'm doing, guys, and I know this is live information I know I'm throwing at you, and let me get it simplistic again. In essence, what I'm really trying to do is I identify the support and resistance. I have a zone, and what I'm looking for is I'm looking for it to touch the zone and identify an engulfing candle, okay? When I see that candle, it's going to signify if it's in the zone. Okay, if it's in the zone, then I'm going to execute a sell. All right, so I look at it, boom, okay, this gets in here, this here, but guess what? This candle, it kind of comes in here and it has a wick and it enters my zone. Now, here's the thing about the rules. You can have your rules change a little bit. You can say, I'll jump in a trade if my candle is close to the zone, if it looks like it's barely touching or it's in the vicinity, or no, I'm only going to, you know, deal with it when it goes right in my zone, okay, into this area right here, okay? And then, of course, I have a zone on the bottom, and I can say the same thing. I'm only going to get in when I see it enter into my zone, when I see an engulfing candlestick. So with the, so let me spread it out. So with the naked trading, what happens is I see my engulfing candle. So for this instance, I say red. I say, hey, I want to jump in this. I see this red engulfing candle. What I'll do is I'll go under this engulfing candle, and I'll go about 2 pips under, and I'll put a pending order in. Okay, I'll put a pending order in. So let's say we switch this. Switch it to gold. Okay, let's say I go here and I'm putting a pending order right here. Okay, the pending order will enter the trade, and then I'm waiting for it to come down and then hit into this zone, okay, to let me know when I'm going to get out. When it gets into this zone, what I can do is I'm going to set my take profit in this zone area. Okay, I can make it right here at the bottom of the, I'm sorry, at the support part. And then my stop loss up here will be right outside the zone. I'll set my stop loss. Let me change it to red. I'll set my stop loss right here, right above the zone. Okay, so I see a trade, boom, it comes into the zone. I see my candle. I set up a pending order here for a sell. It'll be a sell stop, okay, because I'm waiting for it to come down, sell stop. It'll enter the trade. I'm going to write it down, and I'll have my take profit in the zone, probably right at the support line, okay? If it goes this way, it's going to stop right here, right above the high of this candle. So if I did the replay, let's go back here. All right, so I'm looking at the market. I say, man, when do I get in this trade? When do I get in? All right, I see it. I got my zone. Okay, it dipped down, boom. Okay, wait a minute. I see that it starts to enter the zone. Do I look at this as an engulfing candle, or do I want to wait? Maybe I may want to wait. It depends on your rules, but at least you have a consistent rule. You might say this isn't good enough. I want to wait till it gets into the zone, okay, before I decide to enter the trade. But let's keep playing and see if I were to wait. Because if you follow your rules, you may say, you know, this isn't the trade for me. I'm going to wait till something stronger happens. Oh. No, don't see it yet. So guys, what this does is it kind of takes the guessing game out of it, because the rules are if it gets into the zone, I'll jump in the trade. If it doesn't touch my zone, I may just skip it. That's kind of the essence of naked trading there. I really wanted to find a better example. I'm telling you, Adaeze does such a great job. That's why she is the true educator. Let me go back here. All right, where? That's the thing about these graphs. Got to find a candle. There it goes, hiding right there. Okay, so I'm going to kind of mark this one up as if we had seen it. Actually, let me change that color. And again, guys, I mean, you don't have to be right on point with your support and resistance. It's really what you know, see. It's subjective to you. Again, I just look for the major turning points. Come on, pop-ups. The areas where I see that it's kind of came and price kind of fought itself. So I'm going to kind of speed it up just a little bit as far as if I marked up, let's say I went back to the past, I went to go to, I marked it up, and this is what I'm going to see. I'll come into the future, okay, I'll come back to my current time period, all right? So let's just assume we marked it up. We see these support and resistance lines, and actually I'm going to the 1 hour, because remember I'm going to enter on the 1 hour, and I hate that these candles are so small. But here is where I'll put my boxes on the 1 hour. I marked it up on the 4. I put my boxes here on the 1. I was trying to show you the entry and exit points on the 4 earlier, but this chart is giving me a difficult time. Okay. Let's make that a little bigger. Okay. Never wants to work right while you're training. That's just how it is. Now I understand why these IML educators, man, when they're doing stuff, why they have such a time. Because technology doesn't always work. All righty. I really don't like that. Let's stretch it out. All right, so I'm going to just stretch it out just for teaching purposes so we can get it straight. So I know that zone looks kind of big, so let's shrink it up just a tad bit. There we go. Looks a little better. Me and Adaeze were talking about this, like, man, when you transfer these graphs, they make your candles big or small. So, okay, so identify the support line here. Got a resistance line way up here. And so what I'm doing is I'm looking for when it touches into here, okay, into my zone, somewhere in here. Obviously, it kind of was doing this back and forth over here. I'm looking for a green candle, okay? I could have jumped in on this one possibly if this was in my zone, if I highlighted this area. This is an engulfing candle. I could ride it up. And what I'm doing, guys, is, again, I put a pending order in above it, about three pips above it. So I'll just say, just guesstimating, let's say up here, all right? And then I enter the trade and I want it to go up. I'm going to ride it. Stop doing that. Okay. I'm going to ride that up to this zone. This is where I'm going. All right. So I'll put a take profit in this zone area up here. So what I'm doing is I really set it and forget it. I kind of let it hit my entry point because I see a golfing candlestick. I let it ride and I go up. Now, here's the risk to reward part. I take my graph over here. And if you remember, long is for buys going up, short is for sells. Long is for buys going up, short is for sells going down. So I take my long position. I go here to my entry point. And what I'm looking for, guys, stop doing that. All right, so what I'm looking for, guys, is here's where I calculate my risk to reward. My stop loss will be right here on the bottom of my zone. And I want you to pay attention to this, okay? In the middle, it says risk/reward ratio. Risk/reward ratio. Risk/reward ratio. This is the area. Before, I didn't know what this meant right here. But this is how we're going to calculate our risk to reward. And in your rule, you might have that on every trade, I'm just going to do, let me see, get it 1 point. I had it 1.5. Okay, let's say I said 1.48. Let me get 1.5. All right, 1.51 is close enough. So let's say I want to do a risk to reward of 1.51. Okay, so that means on every trade, I'm giving up 75 pips for a stop loss to make 137 pips up here. Okay, giving up 75 to make 137. That's a 1 to 1.5. So what I'll do by calculating, this is where I can go ahead and make my take profit. I can make my take profit right there because I want to stick to my certain rule that, hey, I want to go ahead and make a certain profit. So I'll go ahead and enter here because the pending order, and then I'll go ahead up here 137 pips, and then boom, we have our entry and we have our exit. I don't have to guess at it. I don't have to wonder about it. But again, the thing that I'm looking for, guys, and I'm really not doing it all the justice, but I'm at least trying to get the gist of the naked trading, is that you're only looking for engulfing candlesticks to tell you when you're going in what direction, and you're trading from zone to zone. You're trading from this purple box up to the next zone that I marked up on the 4-hour chart back in the past. That these lines will go all the way to the future, to your present time, and you're going to trade off of these zones. Okay, you're going to trade off of these zones. I look for that. I put a pending order in, either a buy stop or sell stop. Here it'll be a buy stop. When it comes up, boom, it enters the trade, and I'm going to wait for it to go up, and I have my stop loss right under the zone. Okay, and then I have my take profit at my risk to reward level. Okay, you don't have to make it 1.5. You can make it 1.3. You can make it 1.2. But at least in your rules, have a rule of what you want to follow. Okay, same thing. If this was a sell, I'll wait for it to come into this area, and I'm looking for a red engulfing candle. I'm gonna look for a red one, and I'm gonna go down, and I'm gonna underneath that engulfing candle, I'm gonna set my sell stop about 3 pips under, and then I'm gonna calculate my risk to reward. Now, how I calculate the risk to reward, I went over here to this little graph over here, right above the arrow. I hit it. Long calculates if I'm going to go up for buys, short if I'm going to go down for sells. And then, of course, I'm looking at my risk to reward ratio. Okay. I kind of gave a just kind of a broad part here. Again, please get on Adaeze Duncan's class so you can kind of see it over and over and over again. But guys, that's really the essence of it. Let me go back to the rules so that I can really get into that part again. So, all right, so back. All right. So again, when to enter, only take buys in the buy zone into your zone area, only take sells in that sell zone area, okay? Now down here I put while in your zone, okay, you need to see an engulfing candle going in the direction that you want to trade. Remember, if I'm looking for a buy, the candle was coming down into my support, that bottom line, and I'm looking for a green engulfing candle. So that's the direction I want to go. I want to go up for a buy. So I'll set up a buy stop. If price breaks a level, then you have A or B. This is part of my rules. Okay. Get out of that. Okay. So, all right, there you go. So if it breaks the zone, the level, okay, I need to see a retest followed by an engulfing candle pattern. So that means if it goes over that level, all right, and I see it retest, I see it come back down, I need to see an engulfing candle again to go in that direction to see if it retests, all right? Right, okay. If I'm, let's see, move out the way here. I'm trying to hide this little part. Won't do it. Okay, need to see a strong engulfing pattern going in a new direction. That's my B part. If I see it break a pattern, this is how we say, okay, I see it going for a buy. It goes up through my resistance. It breaks the ceiling. How do I know if it's going to continue to go up? You'll wait to see a strong engulfing pattern going back in the new direction. So it might go higher than that level, and you wait for, let's say, you're waiting for it to come down for a sell. You want to see a big, long, red, juicy candle going down first before you jump in. When you see that, then you'll set your pending order to go down. And then you'll set your stop loss, and then you'll calculate your risk to reward ratio, and then you'll go ahead and jump into the trade. So risk management, okay? Setting your stop loss. Set your stop loss right outside the highlighted zone. It's recommended above the last high or below the last low. So when I was showing that engulfing candle and it was really low, you want to set your stop loss right on the opposite side of the wick that you see of the lowest low or the highest high. Here, Adaeze recommended take a risk ratio no less than 1 to 1.3 or 1.3. Remember, I did 1.5. You can have that, but it's your rules. You can adjust it, but I say have a rule of a minimum. Don't go less than 1.3. Recommended 1.5, or you can be greater if you want to. You could have made it, 1.7. You can make it 2.0. It's up to you guys. Here's another managing rule. When your price has moved up 50% of the way, okay, so let's say out of that 137 pips, let's say it goes up 50 pips. What I want to do is I want to move my stop loss. Remember, I had it on the outside of the zone on the bottom. I want to move it up 5 pips above your break-even point. Okay, so 5 pips above your break-even point. 5 pips above your break-even point. So how do you win at this trading thing? First of all, I know I'll probably need to have Adaeze do a second video on this, because I know I've done somewhat of a job on it, but she did an amazing job. But again, guys, to win at trading, you need to stay in your strategy for a long time to build confidence and consistency. She recommended that at least, you want to get 50 trades in to consider before you abandon a strategy. Try it 50 times. And see if it works for you before you even abandon it. By doing this strategy, you'll become more profitable by increasing your win ratio, okay? Even if you lose a trade, you make it up by doing a 1 to 2 or 1 to 3. Understand, remember, in that example I used, we were risking, I think, what was it, 73 pips or 75 pips to make 137. True, I may hit my stop loss and lose 75, but let's say on the next trade I'm going to make 137, which will make up for what I lost. So if you have more wins, you're going to make more ground because you keep a 1-to-2, 1-to-3, or 1-to-5 ratio. Okay? That's the whole object of the game, is that you consistently do it and that you'll consistently have more wins. And even if you lose, okay, or make a loss, you're going to make it up with this 1-to-2 or 1-to-3 ratio, okay? Your goal is to get more pips won for the month, not dollars, okay? Remember, like when we're looking at the swipe trades and at the end of the month they say, oh, they made 475 pips or 800 pips. Well, they don't show you how many pips they lost, but they show you how much they gained. And at the end of the month, you know, if you've gained, then you've made money. Okay, you're in profit. And that's what you want to do, consistently getting better at your strategy so that you can be in profit, okay? Number 4, back test, back test, back test, back test, and back test your plan, okay? Guys, replay it, try your plan out, always test it, okay? And then track your wins and your losses. Remember, have a trading journal. Write down where you're winning and where you're losing, because this, guys, is what's going to help you to track your successes and see where you need to make tweaks at, okay? So that is really kind of it for the class as far as that's concerned. Guys, again, it is working. Hopefully you guys get to see more of it, but please get on Adaeze Duncan's class. I'm telling you, she's going to keep showing you over and over again this strategy. I wanted you to show you the basics kind of how to get into it. Basically, you're getting onto your 4-hour or your day chart, you're marking support and resistance when you go back in time, and then you follow it all the way. Again, you do it on your 4-hour or your day chart, and then you always enter in on the time frame underneath where you marked it up, underneath where you marked it up. So if you do it on the 4-hour, you're going to enter on your 1, and then again, you're looking for engulfing candles, okay? Only engulfing candles going in the direction that you want it to go. And you want it to be either near your zone or in your zone. It's up to you. It's up to your rules. But guys, I wanted to kind of go in, and I just want to go back here so that you can kind of see what the rules were that I put. Remember, use buy, sell, stops, pending orders to set up the trade. You're going to set up your stop loss 3 pips above or below the high or low of the engulfing candle that you saw, okay? And when you enter, you only take buys in the buy zone or sells in the sell zone if you wish. And then, of course, have a rule as far as if it breaks the zone, what are you going to do? You're going to see a retest followed by an engulfing candle, or you're going to see a engulfing candle pattern going in the direction that you want it to go, okay? So I'm going to open up for questions. I'm going to do the best I can to answer them, and then we'll kind of go from there. And if there's anything that guys that you want me to show you, I'll do my best to go ahead and jump back in and show you so that we can kind of, you know, understand it a little better. So I'm going to unmute you, and feel free to ask, and I'll try to make it as clear as possible.
I got one for you.
Go ahead, Charlotte.
If I go on IML TV, do you know about what date? If I go and look at the older videos from Adaeze's sessions, which ones I would find this on?
From February 15 on to present.
Awesome.
Yeah.
February 15.
Right now.
Say again, Brittany.
I'm trying to see if Adaeze has a class right now. It's Monday, right?
Yeah, 9:30. I think she has it. 9:30.
Okay.
So
I
yeah,
think she's back from Africa yet, though.
no, she's
She
home.
should be. Work out today, didn't they?
Yeah, she's back. I talked to her last night.
Awesome.